Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how the markets are responding to the reopening of our economies. And Phil, there seems to be a dichotomy between stocks and the economy. We've been discussing that over the past couple of weeks. I think the question is extreme optimism being priced into the market at this point?
Yeah, I think the stock market is one of the few markets that's really pricing in a V-shaped recovery. And on the way up, as the market got more and more stretched, a lot of people looked at the consumer confidence index and highlighted that, with consumer confidence so high, that would justify stocks and company revenues being strong and growing. So it's interesting that now that's completely broken down. We're seeing that stocks are still quite high. Consumer confidence understandably has fallen, although a few weeks ago we were saying that maybe with all the PPP and the financial support and sort of unemployment benefits that have been created, that the consumer might stay more confident than we thought. But we're definitely starting to see now that consumer confidence data is starting to fall, and significantly.
If we take a look at our next chart, however, it does show retail on the rebound just a bit.
Yeah, and we talked about this a bit yesterday too, didn't we? There's a bunch of data that looks like it's ticking up, and this is quite positive in terms of the trend and just how long it's been working through. So it's up 30% off its lows, and obviously we've talked before about how quickly the economy shut down in March, in those two middle weeks of March. We're seeing retail shops open up, we're seeing state by state open up, and we're actually seeing people go back into shops. And even in my town, there's more curbside that you can do than there was 2 weeks ago. So there's signs of light at the end of the tunnel, and there's definitely increased spending. There's also data in searches that shows that people are searching for retail a lot more than they were a couple of weeks ago as well. So it looks like people are intending to get out and start to buy things again as well.
Well, it also helps that record stimulus is being used to replace missing demand. We can see that in the following chart as well. And it's not just US stimulus, it's a concentrated global effort.
Yeah, and it's huge. Just in this chart shows it in percent of GDP, which puts it in perspective. So obviously, if we're going to have 10% drop in notional GDP for the year, which would be a pretty bad recession, we've basically got that much stimulus money already ready to go in the system. And countries like Germany and Italy are well above that. So there's a lot of stimulus. I think that's one of the things that's supporting the market as well, whether it's actually working its way into equities via retail trading that we've talked about recently, or whether it's just the market pricing in potential inflationary effects and just what happens when people get that money and get back out into shopping like normal, what it does to the economy. What's interesting about this chart too is just the different mix of fiscal versus loan and sort of monetary responses. So the US and I guess Australia right beside it have had quite a lot of fiscal measures, basically financial support, a little bit of helicopter money, whereas a lot of the other countries, especially the countries that have got larger support than us, have done it via loans and I guess state injections into companies, so state-owned equity now. Just a different approach. I guess longer term, we'll find out whether those state injections end up making money for their societies. But if we think back to the credit crisis, some of the government investments into financials and especially into the car companies worked out pretty well for the government, and obviously then helped pay for some of the other programs.
How about the oil market? We've certainly seen a recovery over the past 4 weeks, but there still is a significant supply glut, as we can see.
Yeah, I thought this chart was fun just because it shows where the supply is falling, and it shows about a threefold increase in the amount of oil sitting in boats. That was one of the things that people were talking about back when the futures closed negative a month or so ago. That there's only a limited amount of boat capacity, there's only a limited amount of on-land capacity, but you can see how quickly we've got a surplus of supply over demand of about 10 million barrels a day. That fills up boats really quickly. And so we can see over 100 million barrels has gone into additional barrels has gone into boats that are floating offshore here.
All right, in our final chart, although we like to try and end on a positive note, this chart is really concerning. I just feel like we haven't learned anything from science and history and past pandemics. The numbers are coming back up slightly in many states.
Yeah, I mean, arguably, we haven't learned much from people that have studied the 100 years ago Spanish flu either, because we saw back in the 1918 Spanish flu that every state did their own thing. And there's a really interesting academic paper that found states that had stricter lockdowns, used masks more, actually had a shorter hump, got control of the cases earlier, got people back to work earlier, and actually had a bigger increase in employment a year or so later than the states that didn't do that. So there's plenty of people that have studied history and studied science that could have helped with us doing things better this time around. But what's also interesting about this chart is you can see the states that got hit early, like Washington, like New York, have pretty much got the cases under control. And the wave of new cases is now sort of affecting the South states and the Midwest and the sort of middle of America. So you've got a lot of growth in states like North Dakota, Minnesota, Texas. Looks like it's still seeing growing cases, and Alabama. I guess what you're referring to is the states that looked like they'd sort of got it under control and are now maybe seeing a second wave. And in that bucket, you'd put South Carolina, West Virginia, Georgia, and Florida, sort of a bunch of states that were pretty public about opening potentially too soon. And so that's the risk that we all run if we do start to open a little bit too aggressively.
All right, Phil, thanks as always for joining me on Trade Talks.
You're welcome, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.